I'm of the view that February sell-off, the 6th of February, 5th of 6th, when we hit 60K, that was what I call the price pain capitulation. That was the point where all the frustration, the pent-up Bitcoin sucks energy that we built up through that choppy period in 25 and then through the sell-off in November down to 80K and then again down to 60K, all the investors who are price sensitive, there's three things that really hurt in a bear. And one of them is very obvious. Two of them people don't think about. The obvious one is number go down, right? So number go down, just watching your buy. I bought the top and now I'm smoked. Those people got absolutely flush. We had $2 billion a day in November at 80K and then another $2 billion in February. And for me personally, as a professional analyst, I can tell you, I literally logged into my X. I checked my chat. It said like 25 messages. There was like 20 people asking me for a podcast interview. I just closed the window. I'm like, I don't have time to do that because my inbox is just flooded with people being like, what the fuck's going on? Help. My clients are scared. Can you get on a call with them? Like just phone calls and emails and messages left, right, and center. So I was like, pain, fear. This 60K level is really, really important because we have flushed. This is a turning point for folks who bought the top are flushed out heavily. There's still more to come. And then people who are smart money, you've seen this before. You know what capitulation looks and feels like because you've been there before. The other two things that people don't think about that also hurt, one of them is also number go down, but it's actually unrealized profit going from big to small. So for context, when we look in the on-chain world, we can look at everyone's cost basis, right? It's an approximation, but everyone's cost basis when they acquired their coins, and we can measure what is the unrealized profit or loss that every coin has and sum them all together. At the peak, at 60K, there was $260 billion, $250 billion of unrealized loss at 60K, $250 billion. Sounds horrific, right? All-time high. But then you think about the fact that unrealized profit, the amount of wealth that Bitcoiners were sitting on being like, fuck yeah, look how smart I am. We had $1.4 trillion, 1.4 Berkshire Hathaways, how's that for rat poison squared, at the all-time high. 1.4 trillion. It reduced by 900 billion. So we got 260 billion of losses, but we got 900 billion of paper profits that went to nothing. That is the thing that a lot of people don't think about that hurts a lot. Watching your in the money get much less in the money. And then the last one is time. The boredom and the chop and that 19K thing, that's the thing that shakes out a lot more people. And I believe we're in that phase, that time pain phase after the price pain capitulation. I think when you have these price pain capitulation events, the smart money now knows it's time to accumulate. It's a shift in mindset. And you can see this actually, realize people taking profit just off a cliff. It was the number one thing that was stopping this market going higher. People love to blame boogeyman and market manipulators and whatever else. It was like $3 billion a day of hodlers selling through most of 2025, the back half of 25. It was just so big. You're like, there is no other explanation required. Tons of sell side. When we hit 80K,
Quick note on that, because, and apologies for interrupting, but
no, go.
This is something I appreciate you for a lot because, and maybe it's just for the likes, for the engagement, but you see a lot of people who anytime Bitcoin goes down, it's manipulation, right?
Yep. Or sideways.
It's manipulation, right? Or sideways. Oh yeah, chop solidation, as you say, right?
It kills people. They just can't. They can't deal with it.
But it's like, I think that people often, from my, again, more limited experience than yours, and I don't have the lens that you do, but like what I see is like, there are so many more giant whales, for one, than people can comprehend. That one galaxy whale was 80,000 Bitcoin.
They made fun of him. He sold
like
9.6 billion at the top, and they made fun of him.
You think that's all of his coins, by the way? Like,
yeah.
It's cute. You know, it's cute. You think that's all of the coins he has. Like, good for that guy. You know what I mean? Like, what a legend. Like,
honestly, whenever I write about him semi-regularly, just because like a great case study.
Yeah.
And I often write because it was 14 years ago, and I often accidentally write just from memory. I'm like he's like of 2014 vintage. And I'm like, hang on a second, no, he's 2011 vintage. 2011. This dude, like, wow, what a move.
It's incredible. So I wanted to bring that up because I think that you've been so consistent on this fact that like, yeah, it's really easy to call foul, basically, to say like this, something is nefarious here. And not to say that there isn't market manipulation. There's manipulation in every market, obviously.
Absolutely. Yep.
However, your point, if I'm understanding correctly, has consistently been you cannot explain like Bitcoin doesn't go sideways or go down only because of manipulation. And if you try to
Correct.
claim that, it's just being insincere. Is that fair?
Basically, it's yes, manipulation happens.
Yeah.
But it's when you compare, it's like we're looking at this manipulation thing. It's like and I did this a lot as an engineer. In the world of ground engineering, you got tons of parameters and they're all really hard to measure. Like what's the friction coefficient of soil and cohesion, all this it's hard to measure this shit. And then you go, well, what actually matters? I know, I'll run a bunch of simulations and just like adjust this up or down 50%. Oh, it turns out none of those matter. The only thing that really matters is what that parameter is doing. And from my perspective, that's how you just like govern it. So yes, there's 5, 10, 15% of market manipulation. It moves the price like this, but then it's like, yeah, but you've also got this just massive amount of sell side that like, it's funny that every time the market stops going up in a bull, this particular thing is like really high, always. And I'm like, what is that thing? Oh, it's hodlers selling on chain. It's just realized profit. And I'm like, you don't need a thesis that is rooted in market manipulation to explain why the price stopped going up, because we have a very measurable and observable metric that literally every single time it does this thing of going up a lot, the market stops going up a lot. And then when it goes up too much, market starts going down. It's kind of funny that. And then you look at another way I view it, who bought those coins? And this is where I use the terminology, a top heavy market. At the all-time high, and I'm writing a report on this now, so all this shit's fresh in my mind, 90K, 70% or 65% at the time, 65% of all the wealth invested in Bitcoin in dollar terms was above 90K. Top heavy market. As we fall down, all those top buyers realize, oh, I kind of bought the top, and then they sell. And then the next guy goes, I'm buying the dip, and it turns out it wasn't the dip. And then he sells. And it's like soil rolling down a hill. You've got this avalanche of just like coins falling down to a lower level, and it releases all that potential energy, all that I'm underwater. And then you get a bunch of guys who bought the top who are like, I don't care. I actually just don't care. They become long-term holders. So where we were at the all-time high, we had 65. By the time we got to 90K, was 70% of all the wealth was above 90K. That has now rotated significantly. We've now got 25% approximately of the wealth in this like 60K to or 55K up to 75K zone. The 2018 bottom, that bottom zone, 3K to 5K, 25% of all the wealth was in that bottom. 2022, between that 25K and 15K zone, that was like the bottom formation range. Guess what? About 25% of the wealth was in there by the time the bear stopped going down. Now, the other way that I measure this stuff is, there's a ton of angles here. At 60K, I do this thing. I've got this metric called the mean reversion index. Markets are mean reverting. The secret is to find the mean. What's the thing that the market oscillates around? And I ran this for a whole bunch of things. Power law, that's just like trend. Doesn't care about price. It's just trend model. We've got several on-chain cost basis models, short-term holders, the whole market, where active investors are. Why is that a good mean? Because it's literally the price people paid on average. So if the price goes down a lot, well, guess what happens? People sell on a loss, and then the coins come down. And if it goes up, they sell on a profit. So it literally tracks the price based on where people bought their coins. I've got on-chain volume-weighted prices. I've got 200-day, 200-week moving averages, technical. So some of them are fast, some of them are slow, some of them mixes 9 of them in total. And the idea is that the market oscillates around all of these. And think about markets like a slingshot. There's like a center of gravity where it wants to be. And then you pull the slingshot too far to the downside and it flicks back to the upside. And then it's too far on the upside, it flicks back to the downside. And you can model like how many days, if we're trading at $1 million tomorrow, how many days have we been is it stretched that far to the upside? And the answer is there is no date. It would be a one of one event, Q100, 100% of all days are lower. What happens at bear markets? You eventually get to the point where you just have gone too far below these means. You've just sold off too heavily, too hard. At 60K, that's what is, in terms of this model, Q10. 10% of all days have been lower. So yeah, we could go there on a 10% chance below 60K. 54K is Q4, 4% of all days. Now, all the previous bears that matter, 2018, 2020, March 2020, 2022, all of those bottomed on a Q4 event. So you're like, okay, where the hell are those other 4 days? Because there's a lot of bears out there who, by the way, I say this all the time. I could be wrong. I could be very wrong. There's a lot of bears out there who want 40K and 30K and 45K. So I'm like, okay, let me model those. Let me just see what the odds are for that happening. We're talking about 40K is a Q1 event, meaning there is less than 1% of all days that have been lower. And if I hang on a second, but Q4 was 54K, and that was like 2022 and 2018 and March 2020. Where in fuck's name is those last $2 Bitcoin in 2011? So you got to go back to 2011. So if you're a bear and you want the price, and that's an important word there, I'll explain the want in a second. If you want the price to go to 40K, you are, and for me as a hodler, if it goes there, that's a $2 Bitcoin. Right? In relative terms, that is today's $2 Bitcoin in 2011. You should probably also recognize that there's like a 1% chance this happens. Now, 1% is not zero. There's no such thing as zero in any market. But do I form a base case on that? No, I can't. I actually can't. So my rationale has been 70K is Q20. That's the bottom fifth. Do you really care about buying the bottom fifth at any point in Bitcoin's history? There's an 80% plus chance that you're buying the bottom. It may not be the bottom wick, but like, it's the bottom fifth. What are you doing? Just DCA hard, because it's a great place to buy. And now we're trading at 75. Everyone's like, oh shit, did I miss the bottom? It's like, but the bears told me it was going to 30K. It's like, just DCA below 70K because it's the bottom fifth. Can it go lower? Yes. Does it matter? No. Do I care that I bought at 20K or 15K or 16K in 2020? No. I don't look back at those coins and be like, God, I could have done really better if I had waited like 3 days. It's like, no, just buy all of it, man, because like you're wasting your time and your emotional energy. Buy the whole bottom. Just stop trying to get cute with it.